Welcome everybody. Today is Monday, June 5th. Um Today is going to be another relatively quick lesson. We're going to go over what to look for, our plan from yesterday, how everything played out. We're going to do a trade recap, and we're going to go over the basics of these smart money concepts. So I'm going to break this smart money thing into a couple days because if you get all into it all at once, it becomes mad confusing. I'm not going to lie. There's a lot of facets that go into it. There's a lot of like criteria that goes into it. Not that it's overcomplicated, but it's just certain things that need to like check off on a list in order for the trade to play out the way you expect it to, right? So without further ado, let's just get into it. So tomorrow, what is it? Yeah, June 6th. Tomorrow we don't really have anything in terms of like high impact news. High impact news is anything with a red folder. That's something that's going to really move the market and give us a reaction. So tomorrow I'm going to do the same thing. I'm going to let the first 30 minutes play out and then see what side we take and then look for a counter trend trade, right? If you guys haven't figured out the way I trade already, um that's kind of crazy, to be honest. You guys have been watching me for months, so you should know the way I trade. On days that there's no news at 10 a.m., what I like to wait for is for the first 30 minutes of IV to calm down, for the premiums to cool off, for everybody to just fucking, you know what I mean, make that impulse move and do our legwork for us. So on a day where there's no high impact news at 10 a.m. Eastern, 7 a.m. California time, let the first 30 minutes play out of the market and then look for a reaction, right? Either the highs will get taken out, either the lows will get taken out. We'll look for our ideal setup. What I noticed today, and we're gonna get into it also, just a quick thought so I remember, is our trade worked out nicely for like 38, 40%, depending on your fill. I probably got like 38 and a half. Today's trade worked out again perfectly after 10:30. So it's a coincidence, but it's just something to keep note of, something to just pay attention to and watch. The re-entry at 10:30 something, or I think it was like 10:41. These contracts dipped back down to 40 cents and they ran all the way to like 85, right? And within a matter of like 5 7 minutes, it was 100%er. So it was way cleaner than the trade we took. um it's something I'm gonna start practicing, right? It's something where like if we take a trade at 10:15, 10:20, right before that threshold of 10:30, if we take the trade before that, and we trim and we get stopped out, I'm gonna start looking for that re-entry to catch a round two. If I see a lot of success with that re-entry, I'll be more than happy to signal it. But I'm gonna start paying more attention and start just like, you know what I mean? I'll sacrifice a little bit of profits to experiment. The way I experiment with trading is I do it with real funds. I don't really like to back test. I mean, I enjoy back testing, but I'd rather just experiment with real money. If I take a little small loss on a smaller position, it's all good. If I make a little bit more, that's fine and dandy, right? So let's go back into the daily chart on SPY. Weekly is still the same thing, same objective on the weekly. It was just 43.2750. We're not gonna just get a straight expansion candle, straight slingshot, right? That's where we need to dip back into the daily chart, right? We still have this gap to 42.40, right? So we could still pull back a little bit more. Ideally, what you'll see with these smart money guys, you guys know I like to flame consequent encroachment. What that really means is, in plain English, is when we retrace to 50% of this gap, and a hack on trading view, it's not even a hack, it's low key common sense. A hack on trading view is where this middle point is, this dot, right? That's going to be halfway. So ideally, 42.59, 42.60. I'm going to just draw a little level for myself. Actually, I'm going to draw an alert at 42.60. I'm gonna draw. Oh my god, excuse me. I'm gonna draw a little alert on 4260. This is gonna be like my audio cue for when it pulls back into my consequent encroachment. Yeah, the encroachment level of 50% of this daily fair value gap. If we can get that pullback, I'm not looking to swing long, but we're still gonna be following our plan, right? The low end of our plan is 4240. Ideally, we get to 42, the high 50s, the low 60s, ideally 4260, and then we bounce up out of here until 43.2750, right, on the daily chart. So let's go into the 4 hour as well, because we're looking at bigger time frame stuff. On the 4 hour, let me just clean it up, all this junk. right? On the 4 hour, I'm gonna keep this. We can just get rid of this daily gap actually. On the 4 hour, we have a very, very, very mini gap, right? That we're respecting. We haven't closed out of it, right? So we have these highs to take out. Already it looks like a sweep, but I don't believe we're due for a reversal just yet. Just looking at the weekly and the daily time frames, right? So quick analysis on that, right? We're gonna oh oops, I got confused. We're gonna just let me fix this. Put this right here. Okay, we have our little consequent encroachment level. I know you guys like the vocabulary. I know I sound way smarter than I really am. So we're gonna keep our consequent encroachment level alert up, right? And then we're just gonna put an alert up at 42, 43, 27, 50. Let me fix that too, because it's off. And you guys should keep these alerts on too, to be honest. It's not gonna do you any harm. What we're gonna do is this lesson is gonna be quick as hell, but we're gonna get into the basics of like the smart money stuff, right? What this smart money stuff is basically a run on liquidity, taking people's stops, right? And then moving in the opposite direction. I'm gonna give you guys the most basic breakdown of smart money concepts. I don't want to overcomplicate it. I'm not gonna give you a boring ass PowerPoint. I'm not gonna give you just redundant stuff, right? There's a lot of information out there. I'm going to teach you the way the way I use these concepts or materials with a high hit rate, with a simple explanation on how to execute on it, right? So if you guys want to take notes, more than happy to. I'm going to low key just post it in the Discord chat, right? What we're going to do here is we're going to create, I'm gonna just call it some bullshit, like the liquidity checklist, right? We'll make something like this, right? And low key for like 20, 30 minutes. If you guys have a question, just unmute because I want to keep this mad clean so we could copy paste it. Or actually, you guys could just talk. I don't even know why I said that. So the liquidity checklist, right? What we look for is the same time every day, which is 10 a.m. to 11 a.m. Eastern, right? Our first thing that we want to check off is what side, aka which highs and lows got swept slash taken out, right? That's the first thing you want to get off on your checklist, right? Is okay, did we take out the old highs or did we take out the old lows? If we take out the old highs, we're going to wait for it to make a structure shift, market structure shift, right? In plain English, we're going to look for a trend change, right? Number two is going to be that trend change, right? Number three that we're going to look for is a displacement on the 1 minute chart, taking out, and this is the only complicated term I'm going to use, and I'm going to break it down for you guys again in plain English. Taking out an intermediate term high. Now, without any, you guys can type actually, without anybody getting into the overcomplicated BS, can anybody tell me what is an intermediate term high or low? And you could break it down in plain English. You don't need to give me the overly technical stuff. You won't get extra credit. You know what I mean? Just keep it mad simple. Intermediate high or intermediate term high or low. What is that in your guys' opinion? Everybody participate. If you're wrong, you're good. Don't worry about it. The last high, I like that answer. Let's see what else. What else you guys got? The higher or low that you're looking at to see if it goes higher or lower. Close. Kind of like that one too. I feel like I know what you're saying. Closest higher or low. Swing high between the short-term high or the high that fills a fair value gap. Previous intraday high. Andrew, I'm gonna be honest, that's not what it is. But it's all good. Snakes on a Plane, Awakening, Super Shadow. All you guys is correct. Ryan, I understand what you're saying. You could hop on voice and really like explain to me what you mean by that, but I kind of understand what you're saying. Right? Basically what it is the closest high or low in proximity to you. And proximity, I mean in terms of like distance on the chart, right? The most relevant one to you. And I'm gonna make this thing ITH. We're gonna remember that's intermediate. I don't even know how to spell it. Intermediate. Okay. High or low. Right? Then what we're gonna look for is a development of a displacement box. Isn't that what it said? What do you mean? Isn't that what it said? What's the between what? I'll come back to that. Development of a displacement box on the underlying extra conviction is in the contract chart, right? Step 5. Wait for those candle closes on the 1 minute and don't be afraid to execute. Now, lastly, is well defined hard stop, keeping your stop loss size relatively the same. Adding screenshot of short. All right, low key, Ragawa, we're gonna make a PowerPoint for this. Don't worry, I'm gonna come tomorrow with the guns blazing because I feel like that might help you more. This is the simple trade checklist that I want you guys. You don't need to check it off and be extra, but just keep this in your mind when you're looking to take something. Right? It's not like I'm like checking these off. I've done it so many times in my own head. This is what I look for. Right? Thank you for pinning that too. I appreciate that, brother. I didn't even know you could do that. Simple, simple, simple stuff. I promise what I do for a living on how to make money from 10 to 11 o'clock. I told you guys from the beginning of this mentorship, I'm not going to gatekeep anything. I don't care about sounding smart. I really want you guys to come in here, make money every day. The vibes are good. Everybody's happy. I'm fulfilled. That's all it is, right? This is the way I trade. I swear to God, hand on my heart, there's nothing more, nothing less, right? We do top down analysis the night before. We check it in the morning, right? We stay calm from 10 to 11. From 9:30 to 10, I'm really just chilling. I'm seeing what has divergence. I'm seeing what's strong, what's weak. Today was a very unique day because obviously we had the WWDC Apple event where it went crazy and then it just killed the whole market. Crazy reaction, right? It's not like it wasn't according to plan. My mistake was not being present to take that short, to be honest. Had we taken that short, I promise you guys 200% would have been straight in the bag. Like no hesitation. We could have caught a contract from 20 cents to 60, like no brainer. You know what I mean? The grind up was garbage. What does the displacement on the 1 minute chart and develop? What I mean by that is just FVG, fair value gap. And let me edit that too, because that's a great question. So instead of displacement box, we'll just call this a freaking FVG. Right? Thank you for that. If anybody has any questions on these 6 things for the checklist, don't be afraid to ask, right? What I want you guys to understand though is every time we're on voice, we're going to keep doing the same things, right? It's not like I'm a one trick pony, right? I know how to swing, I know how to scalp, I know how to play momentum, I know how to trade this strategy on reversals. I enjoy reversals so much because your risk is so well defined, right? I'm at the point in my trading career where like I'm like 3 almost 4 years in. At this point, I just want to maintain and grow my money steadily, right? I'm not looking to swing whole account and go dumb berserk, go crazy. I have bills to pay, you know what I mean? I have my mental health to take care of. I want to live a happy life. I don't want my blood pressure going through the roof. When you have everything down to a checklist like this, it's really black and white, right? When something doesn't fit your criteria, just screw it. Let it go. It's fine. Maybe 7 to 10 minutes later, some other trade develops and you can catch that one, right? There's been times like that where I'll get pissed off and then not even 20 minutes later, we'll take a trade and we'll still execute at a high level, right? That's part of the game. But what I want to also talk to you guys about is longevity in trading, right? I'm 3, almost 4 years in. Yeah, last Friday was perfect, bro. I got pissed off twice and then we hit a bagger. Really, it's just like, shut up, bro. Like, nobody, you know what I mean? Nobody cares about your complaints. Even I don't, right? If I was recording myself and watching that recording of my trading, I would have thought, like, bro, you're just bitching and complaining. Nobody cares, right? At the end of the day. But that's part of the game, right? I'm not going to sit here and act for you guys like, oh, I'm the most emotionally intelligent, calm person. Like I'm 24, I still have some maturity to develop. I still have more experience to go. You know what I mean? This comes with the game. But when you can put yourself together and pick yourself up and then catch a bagger, there's a lot for your confidence, right? Confidence is always there, but frustration happens in the game. I'm not gonna lie. Not every day is perfect as it seems on Twitter. When you guys would just get the text alert, there was a lot of hesitation. There was a lot of like questioning myself. It's not as easy as typing the thing, posting it, and then boom, 30 minutes later, oh, bagger, it's all sunshine and rainbows. That's not the game. And maybe it looks like that on Twitter, but I can tell you firsthand, as the person that was posting the alerts for a while, there's a lot of thought that goes into that, right? Maybe is this the most ideal time? Am I just gonna get stopped out immediately? Am I gonna right? These are things that you got to think about. That's why I encourage everybody to just post their own trades, right? Make your Twitter private. It does something for you. When you're confident enough to get in, tweet it out, like you're just putting it out there. We don't know the outcome. We're prepared for either scenario. That's fine. We have a high probability chance of it working out, but the times it doesn't work out, you have to take that on the chin. You have to eat that. I know it's frustrating. I know it's annoying. I know everybody enjoys being right and making a boatload of money, not a lot of drawdown, but with today's trade too, I think we were in it for like 18 to 20 minutes. Probably 16 of those minutes, we were just consolidating and green and break even and red and break even and green and just in that cycle, right? I'll always tell you guys about that, how I was talking last night. If you watched the recording last night, the most important thing I said, and it still stands true, is getting between TP1 and TP2 for me as a trader has always been the hardest thing. It's gotten easier as the time has gone on and more trades have been put on and confidence is there and profit cushion and whatever, you know what I mean? But it's still a thing, right? Waiting for that trade to catch its legs and finally make that push and finally your alerts go off, that in between stage where the 1 minute is consolidating, pulling back, it looks ugly 1 minute, it looks great the next minute, you're in that in between stage. You have to just remain calm, right? That's where I'm going to be on voice. I'm going to try my best to calm your nerves, maybe crack some jokes, maybe just chill, you know what I mean? Let it do what it's got to do. Sit back and just watch, right? A lot of times, most people would be like, oh, it's moving too slow. I'm going to get out at break even. Why would you do that, right? When we were in that trade and we were consolidating, a lot of things still look good, right? We were waiting on Apple to make a little bounce and take a leg higher. It did that. We were playing QQQ, so we were watching Tesla. Tesla finally had a nice little reversal at that time we got in, started having a couple green candles, started pushing up in our favor. When all those things are still firing off, why would I get out for a small gain? Why would I get out for break even, right? Once you make the decision to get into a trade, stick to your guns. I don't care if it bites you in the ass and you get stopped at your planned out stop loss. Stick to your plan. Be stubborn, right? You can adapt with your plan. We adapted with this plan on this trade by just making our TPs a little bit more conservative because I didn't know how much range we would have, to be honest with you guys. And I didn't know how quickly the move would happen. And we were in the trade for a little bit of time, right? So when you see that 30-40%, we would be irresponsible and stupid not to take a couple trims, to be honest with you. Now, it did come back to that 40 cent thing and then do a bagger. That's completely fine. But, it came and it went. It came and it went super quickly. So, without further ado, let's go into our trade breakdown. I just want to see on my screen where did I fill because Loki I forgot. I think I tweeted this one out too. Oh yeah, I did tweet this trade out. Okay. Today felt like the longest day ever. 10:24 is when I tweeted this out. So let's go to SPY. Oh no, QQQ. What the hell is wrong with me? I'm not even remembering what we traded. All right, let's go to 10:22. And let's see who we took, right? We were playing this displacement box, fair value gap, whatever you want to call it, right? And honestly, I tweeted it maybe a couple minutes after I got in. Let me look at my Thinkorswim when I filled. Oh no, I filled at 10:21. I tweeted it at 10:24. Okay, so I got in at 10:21. this candle right here, and it looked fantastic. It looked great, right? We had this mini structure shift, looked really pretty, right? We got in, right? Stop loss was like 16 cents at the time, so nothing like super crazy. This displacement box was serving us so well, right? When you get into a trade here, first TP is gonna be, here. It was a little bit tougher with the TPs today because SPY was like weirdly glitching or whatever. It was just odd in the morning, right? These are your real well-defined TPs right here. And then you let the runners go, had a trend day up after, right? This was the most ideal entry. So we were actually 20 minutes early to this trade, completely fine. Still took a nice little trade, quick one. Who remembers why I said don't short this before I get into more of the trade breakdown? Let's clean up this chart because I want you guys to nail this down in your head, right? Let me check the Discord chat because I know you guys are answering. Equal highs above. Thank you very much. Exactly, right? When you see something like this where and what I want you guys to notice too is the highs. The highs were literally the same, right? So focus on this high, 356.20. Focus on this high, 356.20, right? What they'll do to fuck a lot of people, and this is where I fuck myself a lot, learning about these fair value gaps and whatever you want to call them, is you see something like this. You're like, oh, okay, we took these highs out. We took liquidity, right? We have a 1 minute gap here. As soon as we pop into here and we close, I'm going to short this and my target's a low of day. That's where the narrative has to fit, right? Whether it's your bias, whether it's your plan, whether it's you have to look above and below. I know it's super, super hard because it looks good on either side. You can argue for either side, but in this instance, and I'm happy we saw it in real time, in this instance, you have equal highs above you here, right? Imagine you're shorting right here, or you want to short right here. Let me put this box back so we can play this out in our head. You have an ideal setup here. Oh, a nice displacement candle. Took out this low, right? Took out this swing low. We have a structure shift. Look above you, please. Did we take out all the sell stops above us? No. It's in the market's best interest to get to these levels, right? High of day was 35645. Yeah, if I remember. There we go. It's in the market's best interest to run these people out, and then potentially you can look for a reversal if we have that huge displacement after highs were taken, right? What I would say with the next opportunity to be short was this guy right here. It didn't play out super, super clean, but this short, this stupid fucking magnet thing on TOS or Trading View, bro. Give me 1 second. I hate technology, bro. I'm an old head. This right here. This was a potential short you could have taken, right? You have that small overrun, but we sweep all the highs at this point. This is kind of like a failure to go higher setup. These are some things that I like as well. I like setups like these, right? You get in, consolidate for a little bit, right? Maybe you have your first TP here, second TP here. You would take your first trim. You probably would have gotten stopped out on the rest. That's a feasible trade. Maybe you could have got 20, 30, maybe 40%, depending on what contracts. That's fine, right? But going back into this one, the real re-entry or the second entry or the best entry, actually, I'm not going to even sit here and act like we had the best entry. I'm going to always keep it real with you guys. The real best entry for this trade would have been obviously this guy right here, right? Maybe a little bit closer where we finally took out those equal highs. Or, our entry was good. I'm going to backtrack on what I just said. Our entry was good. Our trade plan was solid. Our thesis was solid. Our bias was solid. The only thing I should have been more aware on is like, okay, look, we have equal highs above us, right? We're coming back into this initial entry gap. The thing that a lot of people get it misconstrued or kind of like confused about with smart money things, low key, it's glorified support and resistance zones, right? This area right here serves as what? What would you guys classify this? If we're just bouncing from here, we cannot break lower. What do you guys classify that as? Support zone. Thank you. It's nothing more complicated than that. There's your entry zone, support zone, right? If you're a futures trader, you can long at any point here, stop above this relative low, right? If you were a futures trader, you could risk, 30 cents. If you're trading shares too, you could risk 30 cents for a potential $1, $1.20 move. That's a 1 to 4 trade. You're risking 30 cents, hoping to make $1.20, right? Risking 1 to 4. That's completely fine trading plan, completely fine, trading system at that point. As long as your risk is managed, that's a profitable system going for a 1 to 4 on your risk, right? What I should have been more aware about, and what I'm going to keep my eyes peeled for, because I still need to improve every single day, is we had these equal highs above us. I wasn't interested in shorting. We had come back into this zone. The contracts were holding near my initial entry price. They were actually a little bit cheaper. I shouldn't have hesitated doing a round two with maybe half of my position size, right? We had already made profits on round one. Round two, the thesis was still intact to take out these equal highs and then high of day. We could have entered this round two, similar risk in terms of how many cents per contract. We could have gone in with half our initial position size, right? So, worst case scenario, we'll lose a quarter of our day's profits, a fourth, maybe close to half. At that point, it's like, yeah, fine. We won't make as much as we were just originally up, but it's worth the second stab. It's definitely worth a second stab to take it along right here, even as soon as this candle pushes back out and closes, along right here with a target of this as TP1 and TP2 here. You could have executed on this trade really, really well. Really well, trailed your stop. I think you could have gotten 100%. On the worst end, you could have made 50%, 80%, right? That's where I need to be more aware. And also, what I'm going to start doing on my chart, just so that I just have a visual cue, is every day at 10:30, I'm going to draw a horizontal line. What I've been noticing at 10:30 and what I've been trying to get to your guys' attention to is usually when you can catch a nice entry past 10:30. In my experience, right, my best trades have been around 10:30, 10:40. That's where the real trend is at, right? The trades that I take before 10:30, I'll hit TP1, maybe I'll hit TP2. My runners are always getting stopped. What I need to be more aware on is after I take round one and my runners get stopped and we executed, is okay, maybe it's 10:30, 10:40, etc., etc. Is there a potential for round two to run it back and take my two take profits and let the runners go? This is something that I'm personally working on to really, really fine tune my system. Our entries are always pretty solid. Our stop losses are always even better than the entries, right? It's a hard order. It's based upon the contract charts, but realistically, it's a real risk. It's a monetary risk thing, right? 16 cents, 17 cents on the worst end. Ideally, it's 15 cents, in my opinion. The way I trade, the way I size in, 15 cents completely cool, completely fine with me. If it stops, all good. No worries about that at all. We're going to be just fine. Life is going to be just as great, right? The ideal entry came, 10:40, 10:41, even 10:42. If you really want a real confirmation, this candle pushes up, this one closes, there's your real confirmation. At that point, you could have taken those contracts at 48, maybe 50, put a stop loss at 35, 36, right? Risk 14 cents with a smaller position size and take these contracts back up to 80 cents. You know what I mean? When we took this first trade here at 10:21, contracts peaked around 65, if I'm not mistaken, from 47, maybe like 68, something like there, a couple cents off. But that was my mistake today. But it's only going to make all of us better, to be honest with you. We know not to short with equal highs above us, and high of day was pretty close. When we were longing here at 10:21, 355.37, high of day was $1.10 away. On QQQ, especially with the Apple event and the hype that was going into it, a dollar move on QQQ in the morning session, which is up until like 11:30, 12 lunchtime on the New York stock market on the East Coast. It's a dollar range is really not too much. A dollar move on SPY, QQQ, that's not outrageous, right? We were playing a contract that was $1 out the money, move super nice. Tomorrow I am gonna focus on SPY. Hopefully it doesn't glitch out because SPY, I prefer the way it moves. I'm not really used to QQQ, so we could really trade everything, but we're gonna go back to what we actually focus on and love. So we have our plan for the rest of the week. We have a little trade breakdown for the rest of the week, and I'm happy that you guys saw today in real time to not short when you have equal highs above. I'm happy that I was aware enough to just let you guys know, because I know a lot of people would have seen this, and as soon as we came back into here, you would have shorted it, and instantaneously, maybe within 2 minutes, your stop would have been triggered, right? Those are the worst trades to take. Those are the worst trades for your confidence, for your account, for your ego. When you get into something and not even 2 3 minutes later you out. It happens to the best of us. Damn sure happens to me. It's gonna happen eventually, right? That's the name of the game, knock on wood, but that's the reality of trading. If we can avoid that though, and just watch and observe and see why it didn't work or why it wouldn't work, that's where the real learning is done without putting your capital at risk, right? It doesn't matter if you're going in with one contract and you usually go in with 20. If you can avoid a stupid, dumb loss, you're going to avoid over trading. You're going to avoid building bad habits. You're going to avoid doing dumb shit to just try and make money, try and force it, right? So, super, super quick lesson. I want to keep this smart money stuff. I want to just build on it. I don't want to give you the whole book at once. Not like I'm gatekeeping, but I want you guys to see more of it. When you see more of it in real time, it's actually better than just studying on the videos, PowerPoint, or on like a Twitter thread or whatever. You know what I mean? The real life stuff of watching price go, there's nothing that's gonna ever beat that, right? So even if we take a trade and we take it for 20 minutes and we made our money, what we're gonna do is 10 to 11 is our time, right? That's where we hang out, we look for good trades, we execute. What percentage do you think the market goes? I would say 90%, fucking 95. I don't want to say 100%, but a lot of the times you will be surprised. Even on the bigger time frames. I know you saw this on the 1 minute, but 5 minute, 50. It's a damn sure. It's a good bet that I would take that bet 9 times out of 10. I'm not gonna lie, honestly. If I see equal highs above and I see a nice little setup, I'm gonna freaking take it, right? And the terms, I'm gonna give you guys these terms in plain English. I know there's so much smart words, right? I'm gonna keep it plain English. Equal highs, right? They always say relative equal high, like they sound smart. Just the highs that are close to each other. Do you see the body? I use the wicks. I personally like to use the wicks. Other people will make it make sense with the bodies. The only times I like to use the bodies is I'm gonna see these bodies close to being within this box, right? You can argue that, oh, this body closed outside of this box, right? Let it have some overrun of 3 to 5 cents. Give it a little bit of room for error, right? It's not gonna always be perfect, but our trade worked out just fine. When these were full body candles, it looks scary, right? But you just wait for the candle to close. If you can remain in the trade, the stop loss is there. Let it do its thing. Let it just bullshit around. I don't want you guys to get overwhelmed with the 1 minute anymore, right? And be honest, when you guys are watching me live trade or you're live trading with me, are you guys on the 1 minute, on the 5 minute? Just keep it no cap. Just be honest, because I just want to know. I want you guys to start implementing the 1 minute here and there. 1 5 and the 15, that's perfect. Yeah, and sometimes the 15. Let's see. 1 minute and 10 minute. 1 minute, 5 minute, and 15. One. And a lolly, that's how we fucking rock. Just the one. The 15 will use it for like targets, but I'm a 1 minute champ, bro. 1 minute, 1 minute. Yeah. That's good. If you guys can handle the five, honestly, you're in good shape. But I want us to really tone it down because I want you guys to not get scared of price anymore. I want you guys to feel what it feels like to be in 8 1 minute consolidation candles. You have to acknowledge in real time when we were in this, I knew this was consolidation. I'm not saying that to be smug or smirk or I'm like the smartest guy alive, but I've just seen this a lot. They're just accumulating for another move up, right? Now, was the move going to be up or down? I had a bias that it was going to be up because we had TPs here and here, right? When we came down here, they're just reaccumulating and they're going to take out these equal highs and this high right here. In hindsight, it makes perfect sense, but I want you guys to go back and study why did it do that, right? Why did it consolidate for, let's see, we got in at 1021. This damn thing consolidated for 12 minutes before we finally moved, right? During those 12 minutes, yeah, maybe you can watch one 15-minute candle and sit and sip your coffee. Sit and watch those 12 1 minute candles. Let all 12 of them open, close, print, move. Like, get into the field like that. I'm telling you guys, once you get over the fear of the 1 minute, you become so extra calm. You become so extra calm. You can see it. I know there's some psychos that trade with the 15 second. You can keep that shit to yourself, right? I'm gonna live past 40 years old, so I don't want heart problems. The 1 minute is good for me. That's the lowest I'm gonna go, right? The 1 minute is good enough for me. I was seeing people trade on the 15-second. Sickos, bro. The sudden pump or dump is what scares me. It's 1 minute. You know what I mean? At the end of the day, let's be self aware of these candles. It's 1 minute of your life. I know it looks scary. I know it looks crazy, right? If you have a dump candle and it gets bought back up, let it happen, right? What I want you guys to do is not even with your own. Let's say you're really, really comfortable on the 5 minute with your executions, right? When you're done with that trade, flip to the 1 minute and just see what price did. See what it's doing after you got out. Just get some more screen time in terms of that. You guys know I'm all about balance, etc. But from 10 to 11, let's say we finish our trade at 10:20, we have 40 minutes, right? We'll just hop on mic. We were just bullshitting today, having a good conversation, having fun, laughing. Let's just watch price, right? Let's just see what it's doing. Is it accumulating? Is it being manipulated? Is it distributing, right? 3 market cycles. Always remember AMD. Always remember that, right? You have an accumulation phase, manipulated move up, right? They'll distribute the move later. The market will always move in those 3 cycles. On the 1 minute, 4 hour, daily, weekly, doesn't matter. People have to accumulate at a certain position, stop certain people out, buy their position up, move the market up, manipulate the price, then distribute it later on, right? It's the 3 ways in which the market moves. Always remember AMD, not advanced micro devices, but accumulation, manipulation, and distribution. I'm gonna do a whole nother lesson on that on the bigger time frames because you can look at market cycles, you could do it on VIX, you could do it on Tesla, whatever you like, right? Especially SPY. SPY it's really good on. ES it's really good on too. A lot of these moves are manipulated moves, right? Whether they're stopping certain participants out, stopping retail out, whatever you choose to believe. I'm not gonna sit here and act like I invented the algorithm, but think about the game like that. The reason you guys are becoming more precise, and I'm seeing you guys starting to really eat and understand this contract thing, the contract fair value gap thing, is other participants are getting stopped out, right? You're buying these people's stops essentially. You guys are fucking doing a fantastic job so far, but understand how you're making that money. I hope it's sort of clicking for you guys. I hope it's clicking well for some of you. Maybe you're grasping it faster, right? But we're all seeing relatively the same thing. Ryan, I think honestly, Ryan, I think you brought up that short idea at 20 cents for these 427 puts, or I think it was the 428 puts. They went from 20 cents at your entry price that you saw. Maybe you didn't take it. Bro, they went from 20 cents to, you know how high they went? They went to $1.60. They did 800%. They did 800%, and you wouldn't have gotten stopped out not one time. Yeah, you not one time you would have gotten stopped out. They did 800%. Nuts. 12 cents to 8 is almost 900%. Fucking crazy. I'm telling you, this contract thing that we're learning, I promise you guys, this is the sauce. This is the real shit. I've never been scared to like I'm some cocky shit. This is where the money making's really at. This is how you disrespect contracts. There's been so many times I've tweeted out a 30-cent contract and that shit'll do $2. It'll do freaking $3. Like thousand. I've seen so many 1,000% on SPY in the past year and a half. This is how you get into it, right? You get into it when it's dumb cheap and people will message you that you're retarded as fuck for buying this, and then it goes 2 hours later, and then you just I'm gonna start showing you guys the DMs of some people I've disrespected because they're like, "Oh, you dumbass! You bought a 30% contract. 9 cent gain is 30%." And then 2 hours later, it goes to $1.50. I'll message them a screenshot of me being up 500%, and then I got a follow request. Right? It's only dumb until it works, and these people are buying your contracts. They're the real dumb ones that they're paying $1.50 for something I paid 30 cents for. So who's the real dumbass? You let me you let me know, okay? This is the real sauce. But how you get into it is you watch these contracts. You see the good times to get in. You have well-defined risk, and execution is only gonna get better with the more times, the more sessions we live trade. And this is gonna be this could be a 6-month mentorship. This could be an 8. I don't care. We're gonna keep running it till the wheels fall off, and everybody's gonna be at that point, right? I hope most of you guys are grasping it so far, right? Obviously, there's more repetitions to get into. There's a couple more lessons I really want to go into in terms of execution, psychology, risk management, the right days to trade. We're still, honestly, we're still getting our feet wet, guys, right? We're still getting our feet wet. I still want to do one-on-ones with literally all of you. I'm working my way towards that. It's a little bit, you know what I mean? I bit off a good amount, but I'm gonna chew it. Don't worry. There's still a lot that we need to do in this mentorship. The main focus, it's not like I don't want to just sit here and collect something every month for you guys, right? I really don't want that. I'm really good. I'm very blessed in life. I'm fine. You know what I mean? I just want you guys to really learn. I see everybody has the potential. I love the community. I love how much you guys engage. I love fucking, having fun and talking shit with you guys. And Lali will post something and there's 45 train emojis in 6 seconds. That's hilarious, right? But I really want you guys to get a positive return on investment for this, whether it's your execution, whether it's looking at the market differently. It's just any hump that you can get over in the market, whether it's a mental hurdle. I want to be the guy that can help you with that, right? The contract fair value gap thing is the sauce, though. I want you guys to focus mainly on that. Everything else will fall into place. You guys are options traders. Um, we have Tree Slinger in here. He's futures beast. Honestly, he's an animal. Very humble guy. You guys will be surprised. He's an amazing person. Um, you don't need to get into the nitty gritty like all these geeks do. I'm gonna be honest. I see a lot of these pages follow me too. I'm not gonna name drop them because it's just recorded. A lot of these geeks follow me. They don't trade options as good as us because they don't know about this. Maybe they don't execute. Some of them are on demo, right? It's one thing to be on demo and to talk your shit, whatever. Oh, the market was obviously like this. Execute it live, call it how it is, right? Stick your neck out, tell everybody where you're buying the option, tell everybody where you're trimming them, have the plan planned out on some real shit, right? I want you guys to learn from me firsthand on that. Everything else is going to fall into place with a little bit more repetition, a little bit more lessons, as many lessons as possible, some weekend work, and it's just all repetition after that. I promise. There's so many opportunities in the market to take something from 40 cents to a dollar, 40 cents to $2. I know it exists. You guys need to wrap that around your head that it's so possible, right? Inception, that's a great question. I'm gonna take Marsh already did the legwork, right? Look at this right here. I'm happy Marsh posted this too. I was at the gym and I saw this and I was sick. Look at the charts breakdown. I'm gonna post it in the abundance chat. Perfect. Perfect setup. I'm, I'm not gonna say that I would have caught 500%, but that fits the checklist really nice. That fits the checklist really nice. And at that time that the market was selling off that fast, look at what Apple did from 1 to 2 after they announced like the MacBook, whatever nonsense they announced today, regular stuff, right? They didn't change the world with anything. They announced a $4,000 headset, right? People are gonna buy it because people are Apple maniacs, but they didn't really do anything out of expectations, in my honest opinion. They pumped the market like hell, and they just killed the market within 1 hour. It was a crazy sell-off, but it fit everything in the checklist. The contract charts had a gap. SPY had a gap, right? ES took out all of its highs. We can look. We can look right here. Let's go back to ES on the 15. Reset the guy. Right. Let's get rid of this nonsense too. ES took rid of all its highs. Let's go here. Trend line. ES had okay. I don't know why it's not drawing a line, but ES had taken all of its highs. Right. At that point, it was just a matter of finding a nice entry on the 1 minute and then executing. And you could have kept your stop the same, 15, 16 cents, right? So I'm not going to sit here and act like, oh, yeah, I would have 10 bagger, but it definitely fit the criteria, right? There were definitely many opportunities to go long and short in the market. We caught a little humble 40%er. Had we had been 20 minutes later, we could have caught a bagger on the long side. Had we have waited a couple hours until 1 or 2 o'clock for this Apple event, we could have caught 2, 3, 400% on puts, right? So you can flip your perspective on the dime when you just see what highs and lows got taken out. Very simple. You know what I mean? All the highs that gotten swept, even up here too. This is the real highs that got swept from that 1 o'clock guy. You know, right there. So crazy day. I'm not gonna lie, super crazy day. Does anybody have any questions so far? And Andrew, you can stop the recording too. I'm just gonna chop it up with you guys for 10, 20 more minutes. Answer questions. I don't know. I don't even know if Andrew's still here. Andrew, you here? Okay, yeah, you can stop the recording, brother. Does anybody have any questions so far?